All right, let's talk about something that goes way beyond just filing your taxes once a year. We're diving into the world of strategic tax planning. It's really about designing your financial future, especially if you're living abroad or, building a property empire. So, does this sound like you? Maybe you're an American living overseas, trying to figure out a whole new tax system. Or you're a Brit managing your pension from halfway across the world. Or hey, maybe you're a real estate investor just trying to squeeze the most out of your portfolio. If any of that hits home, well, you're definitely in the right place.
And here's the real issue, right? The financial lives of people like you, global citizens, serious investors, they're complex. They're messy. You're juggling different countries, all kinds of assets, income streams from all over the place. And the standard tax code, it just wasn't built for any of that. And that's exactly what this is all about. We're going to peel back the layers of strategic tax planning. It's about moving beyond just following the rules and into a place where you're proactively growing your wealth. So let's get into it. Okay, first things first, let's frame the challenge. It's so easy to see the tax world as this giant, impossible brick wall. But what if? What if we thought of it more like a maze? It's complex, for sure, but with the right map, you can actually find your way through. This really shows the fundamental difference in mindset. Standard tax filing, that's all reactive. You're just reporting what already happened, basically to stay out of trouble. But strategic planning, that's proactive. It's about setting up your finances right now to lower your tax bill in the future, to hit your long-term goals, and honestly, to keep more of the money you earn. One's looking backward, the other is all about looking forward. Let's start with our first profile, the global citizen, the expat. I mean, living and working in another country is an incredible experience, but wow, it comes with a pretty unique set of financial headaches. You hear this all the time. It's that super frustrating spot where two different countries both think they have the right to tax the very same income. And without a solid strategy, you can absolutely end up paying taxes twice, which just kills your earnings. And it's never just one simple issue, is it? Expats are basically juggling a few major challenges all at once. Of course, there's avoiding double taxation. Then you've got to figure out these complex domicile rules to nail down your official tax home, which, trust me, is way more complicated than just your mailing address. There's also managing pensions, like moving a UK SIP or a US 401k across borders without getting slammed by a massive unexpected tax bill. And finally, you have to plan for repatriation. Like, what happens, tax-wise, if you decide to move back home one day? Okay, let's switch gears to our second profile, the savvy real estate investor. Whether we're talking about rental houses or giant office buildings, the finances are just as complicated, just in a completely different way. This quote just nails it, doesn't it? Real estate tax law is an absolute minefield. There are specific, tricky rules for everything from buying to selling. Trying to navigate all that on your own isn't just difficult, it's a huge financial risk. And here's why it's so complex. Taxes aren't just an issue when you file at the end of the year. No, they are a part of every single stage of a property's life. From that very first strategic plan and how you structure the deal, to raising capital, actually running the property, and then, eventually, the exit. Every single one of those steps has a tax consequence you have to plan for. So let's look at some of the specific hurdles. You've got regulatory compliance, things like the FIRPTA rules in the US that can trap foreign investors with a surprise withholding tax when they sell a property. Then there's the constant battle to maximize every single possible deduction. A huge one is deferring capital gains, because that lets your portfolio grow so much faster without being dragged down by taxes. And crucially, choosing the right business structure like an LLC is totally non-negotiable for both protecting your personal assets and saving a ton of money on taxes. Okay, we have talked a lot about the challenges. Now for the fun part, the solutions. Professional planners have a whole toolkit of strategies to navigate this maze. Let's look at a few of the really big ones for real estate. First up is something called cost segregation. Now, I know it sounds super technical, but the idea is actually pretty simple. You basically break down a property into all its little pieces: the carpet, the light fixtures, even the landscaping. The tax code lets you write off these smaller items way faster than the whole building itself. And the result? Bigger tax deductions right now, which means more cash in your pocket today. Next up is one of the most powerful tools in all of real estate, the 1031 exchange. Get this. It lets you sell a property, take all the profit from that sale, and roll it into a new, similar property without paying a dime of capital gains tax. It is a complete game changer for growing a real estate portfolio because all of your money keeps working for you instead of a big chunk going to the government. And finally, let's talk about REITs, or real estate investment trusts. The easiest way to think of them is like mutual funds, but for property, letting you invest in a big portfolio of real estate. And some special types, like an UPREIT, have this massive tax advantage. They can let you trade your own property for shares in the larger REIT without triggering an immediate tax bill. It's a really smart way to diversify and cash out without that big tax hit. So we've seen the maze, and we've looked at the tools to get through it. But you still need a guide, right? The last and maybe the most important piece of this whole puzzle is putting together the right team. When you're looking for that guide, here's what to look for. They need real, proven experience with international taxes. If you're an expat, that's a must. They have to be proactive, always thinking 3 steps ahead instead of just reacting to last year's news. Their fees should be crystal clear so you know exactly what you're paying for. And of course, they need to deeply, truly understand their field, whether that's global tax law or the nitty-gritty of the real estate market. And really, this is the key takeaway from all of this. Strategic planning is a total mindset shift. It's about taking control, about moving from playing defense to playing offense with your finances. You're not just reacting to the tax code anymore. You are actively designing your own financial future. So, I'll just leave you with this one question to think about. Take a hard look at your own finances. Are they just a record of your past, or are they a plan for your future? Because honestly, the answer to that question could change everything. Thanks for joining me today.